Hi, everybody. How are you? Victor, can you hear me?
Yes.
Good. Yeah.
Yes.
Okay, great. Okay, Brian. Okay, I'm gonna make Samantha and as my co-host, Samantha. Okay. And I also make Brian as my co-host. So both of you sometimes to help me answer some questions. Okay. Okay. So let's get started. Yesterday was class number 5. Today should be number 6. Okay. I'm going to share screen a little bit later once I get those informations. Oh, you know what? First, I want to show you this. In the J accounting, can you guys see them? Let me share with you first in here. Now this is under jsoftware.com. Can you hear? Can you see me, Brian? Can you see my screen? Hey, Brian. Or Samantha, can you?
Yeah, I can see.
Okay, now, like here, it's called jsoftware.com. Now, in the middle, do you see like try J text right there?
Yeah, I see it.
Now, in here, you could be able to fill in information and look for, get the free text software where you can evaluate the text software. Okay. So this is where you can find it. Okay. So now let me get this to the chat so that way you guys can get it. And some of you can help me to post it in the WeChat group. Okay. This is how you can get the copy. So now I'm going to take class number 5, practice number 5. Let me enlarge it. Right. I just it takes a little bit time to load it up the class 5 information. Now, oh, this is actually, we taught class 5, isn't it? I'm sorry. Today we're gonna teach class 6. Right, Brian? This is what we taught yesterday.
Yeah. This is what we were talking about yesterday.
Okay. 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 So we're gonna do class number 6.
Should be press 6.
Class number 6. practice number 6. Like, yeah. It's coming. I was open 6. How come? What's wrong with it? Let me see. Hey, Brian, how come you like this? Okay. Okay. So now, this, hey, we're going to learning something pretty cool. Business, self-employed business, Schedule C. And also we're going to learn depreciation asset, as well as the estimate tax payments. Okay. This is something new. Okay. So now, this is taxpayer information. So own a business for 15 years. They're located in these places, and they post a building. They use a cash basis. Gross revenue 250K, and those are all expenses. And also, there is a cost of goods sold. This is the mortgage interest. How come the interest is only that little? Oh, because it's the mortgage, outstanding mortgage was small. Unlike in California, right? California, we are with my mortgage like that. That's a different asset. Now, Victor helped me to send an announcement to the group. Victor, are you there?
Yes.
Okay, please help me to send it in the group. Yeah, some people don't get used to it. Now, I am going to teach. I only use that. Now I'm going to stop the sharing because I'm looking for the information. Once I get that information, I'm going to share my screen because I don't want to get my client's information out. Okay. Okay. Today is number 6, right? Today is number 6. Okay. I'm going to share my screen with you very soon. Okay, very soon. The trade tax software used in the year before. Okay. I'm going to get this. Now, okay, I'm going to get my screen to share. I'm going to share my screen right now. Now, as you can see, right now, I have my practice number 6. In fact, I have been opened so many of them. So let me close some of them. And I close number 5 as well. A couple. So now, here is how you split your screen. You put your mouse right above that plus sign. Click and hold. And as you can see in the middle, there is a half. Let go. So now in here, I can go to whatever I need to right now. Here is what I need to now. Now this is the taxpayer information, as you can see, right? Ooh, sorry. Here is. Sometimes when you do the share screen, it kind of like it comes funny a little bit. Okay. Let's go right. Let me see. Now I need to input the screen to the point, so that way I can see both sides. Now, because I lowered over from the last year tax return, and some of the number are green, so I need to just double check. Oh, sorry. When I accidentally hit the number, I can just undo it. Now, this information in here, we need to check this little box. There's no foreign asset. There's no virtual currency. So now in here, I change everything to San Fran. Okay, I want to show you the California one. So now in here, the ID, obvious. We want to change it to California. Just for illustration purpose. Now in here, you can do escape. You click somewhere in here and you escape. Now there's no dependent. This is a single person. Now there's an estimate tax. You remember estimate tax payment. Now in here, it says that they pay the estimate tax payment. Let me see, where is the estimate tax payment information? It's like here in the very bottom, on the right bottom, right? It says makes a quite bit of estimate tax payment. Now this is what from the last year, the software. Oh no, I put in what number? 4350. Now, sometimes you have an overpayment from last year, and also sometimes if you file extension, you will have an extension payment. But in this situation, you only have every quarter pay. So this is pay in. So we are using the 2021 tax software. So this is. So you need to pay in 2021 for the 2021 tax software. So now, if we do 2022, oh, sorry, wait. 2022, you need to do, you should have been paid April 15, 2022, June 15, 2022, July 15, 2022, and January 15 of 2022. It's free, like that. So now, because we stick with the software we're using right now, okay? Now,
Ready?
we're really calling, so make sure you mute yourself if you, okay, now, in second tab, thank you. Here's a self-employed income. Now in here, they say what kind of business it is, okay? And the name of the business and the kind of business that the IRS have a code, and then also the address. So now in here, I change this one to in San Fran. Okay. So now we need to mute yourself if you are not speaking. So the otherwise really calling. Okay. Thank you very much. So now, if you're using the not cash spaces, you need to check accrue or something. If your cash spaces, which you don't need to check anything, basically. Okay. If you're not material participated, you need to do that. Okay. If you start or acquire this business in this year, you also need to check this little box in here. So now, in here, there is a 1099 required. If any payment required to 1099, let's say, is there some payment for required 1099 and they issue 1099. So now, going back to the scenario in here, they have a business. The revenue is $250,000 right here. Oh no, the revenue, the income. The income. Where is the income? Let me see. And located in the permanent. Oh yeah. So there are two number 250. They was confused me. The revenue is in here, 250K. Right here. See, when you put the curse in there, they will highlight so you know you put in the right places or not. Am I right? No. I did not. So this is right. Now, the second thing, we're going to look in for advertise. Right here, number A in here. Now, the internet advertisements is also inside the advertise. Okay. So there's a radio advertise. So wow, the heavy advertising in 3 different way of advertise. Brian and Amanda, help me to mute them. Thank you. Now the insurance. The insurance is in here. So now office expenses. Repair. And then taxes. That could be sales tax, as well as the property tax for the building they're located. Supplies, utility, now so far all the income and expenses has been put it in besides the cost of goods sold. Now the cost of goods sold is the right side. If they're at cost, you don't need to check anything. But if they're using other than costs, you need to check. Okay. If you happen to change the accounting math or the inventory math, you need to check this in this year. So now the beginning is 70K. They purchase the ending inventory just like this. So now, up to now, and there is a mortgage interest right here. So we put the mortgage interest line. That is mortgage interest. So what else do we need to put it in? We need to put in the asset. Right here, under 13, depreciation. Do you see this blue form 4562? You double click. That give you the opportunity. Now, this is the first one. Do you remember they bought the building 15 years ago? Okay. They own and operate it for 15 years. So now, and then they purchase for the business. So now they purchase on this day. This is the building, and this is the land. Now there is because we're in 2021, so there should be accumulated depreciation. In here. So now this is the commercial, so they're using this. Now be careful when you go to commercial, it could be either 31.5 years or 39 years. So in these cases, we choose 31.5. So now you could paste down right here. We have this display case. They bought it in 2013. So it's 20K. It's already fully depreciated. It's fully depreciated. Now, it's in here. You're still using this under 7 years right here. So now next is a computer. It's this one. that bought in 2021. Bought in 2021. 5,000. Now, in this situation, there is no price depreciation. It's just a brand new at the very first year. So we use this M is 200, 5 years. The lesser number, this one does not need to put in any number. And this one does not need to because of brand new. In my software, because straight text software using the same information for the year before, I load over. Okay, now let me go down to here. The 13 is right. The 16 is right here. Page down, page down, page down one more time. There's a laser printer. The laser printer was purchased in 2021. So obvious, there is no price depreciation because we are using the 2021 tax software. So this is the year that happened. So it's 5 years. So choose M. This one, 200. 5. Under the new law, they could take 100%. Now, anything else? Let me see. Page down. There's a parking and building improvement. Right here. Asset. 5. This is also 21. 15,000. Now, there is, you can choose a straight line. As you can see, system tells you straight line in here for 15 years. Under the new law, this is called fixture. They could be allow you to take 100% in the first year. Now, next is a color printer. If 3,000 have been taken for, so it's already fully depreciated, but you still need to put it in. Page down. One more. It's a Toyota truck. Okay, let me see. In this example, it does not have it. I'm going to show you a truck a little bit later. Okay, in this example, it does not have it. I show it to you after I show you the example. I zero out this one first, right now. Okay. Now, let's view. In this situation, here's what it looks like. Well, the personal information is simple. It's just a name and social and the address. Now, go to Schedule C, where Schedule C say the revenue is 250K. It shows this business is pretty profitable because here they show this thing, but the cost is relatively low, as you can see. Look, the cost of goods sold in here, under the cost of goods sold in here, like there, they start with 70K as a beginning inventory. They over the year purchased 29,200. So the total available is 99,200. At the end, there's a 33,300 any inventory. So they really sold for 65,900. So this is the material, the cost of goods sold, they sold it. So the cost of goods sold, they sold it for 65,900. They go back to like here. Excuse me. Where their gross revenue is 250K. It's pretty profitable business, as you can tell. Most of the time, not necessarily this much profitable. So now they do a heavy advertising, as you can see. Now, what helps them to legally lower tax is the depreciation. Well, all other expenses, as you can see, we are put it in like here. That against the original information in here, right? All those information. Now, the depreciation, look at here, schedule. As you can see in here, the building by itself, I give you good almost 8,000 depreciation. You see? Like that. Almost 8,000. 7,938. So now the things put in places before and fully depreciated, you don't have any. And then there's some asset you put in 2021, those 3, 4, 5, 6, 7. Those are put it in this year. Now, there's a new rule, as you can see in here. The bonus depreciation, the 5,000 take it all, the 2,500 take it all, 15,000 take it all. Do you see it? And this is a new law since 2018 that allow you to do so. Now, you have an option to choose split it over the year as well. But most of taxpayer will choose to get this deduction right away. So therefore, those two add together, they give you a depreciation of 30K plus. Now, total together, this is what the total expenses include depreciation is almost 60K. So 124K is the revenue. Now this revenue is going to subject to 2 taxes. The first taxes is income tax. You get this. You get to the income tax. And the second thing is self-employment tax. Okay, so the income tax, how the income tax goes? Well, you have a, do you remember you get 124K net revenue? There is a minus in line 13 of 20K. That's called QBI. It's a QBI deduction in addition of your original expenses. It minus another 20% of the net income. That's a pretty cool deal. You see it? So you start with 124K, and plus or minus in here, and minus this, and get to minus this 20K. And then you only ends up 82K taxable income. Your income tax is 13K. Now, that's not all. Do you see line 23? There's about 17K. That's called self-employment tax. Let me show you that there. You see this? And this is coming from this self-employment tax. this is all the self-employment tax, half of it can deduct it. That's why you see this net income. You also see minus half of, and you also see this 17,000. So as you can see in here, go back to 1040. You get this estimate tax. Ooh, the old tax, 14K. Now, any questions so far? If you have a question, you can ask me right now about these classes. You need to unmute yourself to ask questions. No question? Are you sure no question? No question means sometimes. Huh?
My question is, he already paid the income tax, and also why he paid 17, almost 17 over 17,000, the property, no, the personal tax, right?
No, the 13,000 in line 22 is income tax. The line 23 is self-employment tax because this person is self-employed. Like that, Schedule C. So now, when you work for your boss in receipt W2, your boss pay half of it, you pay half of it through payroll tax. It's already going to medical, Social Security and Medicare. But so self-employed, it does not. So it paid at the end of the year. Now, there is one legal way to lower this is to incorporate this business, become an S corporation. You pay the owner a reasonable amount of W2, and then the rest of the K1 is not subject to payroll tax as well as self-employment tax. But that only happen if you incorporate the business and also pay the owner reasonable amount of payrolls. That's a good question. Now, let me show you. Let's say this is 124K, something like that, right? Okay. The net income was 124K, right? 124344. 124344. 144344. 144344. So now this will zero out. Oh, 124. I'm sorry. I try to zero out this Schedule C so that way I want to show you another. Now in this situation, we zero out, right? Can you see it? So now, as you can see right now, there's no income. Now, let's say the owner incorporated and also pay, assuming this is EIN for that corporation, and pay the owner 60K, let's say, okay, of the W2. Let's say in a normal situation, if the owner don't run the business and hire a manager, need to pay 60K to hire a manager to run the business, for example, okay? So now, here's what you're gonna get. You get a S corporation in here, right here. let's say, like that. And then it was 1, 2, 4, 3, 4, 4, something like that, right? Now, minus is paying the 60K in W2, so it's the deduction for the company. So the K1 income is this. So this person, instead of running a business as a self-employed, now this person running a business is under the S corporation. The owner pay himself or herself 60K as a W2. And the rest of the money become K1. So the money comes like this. Get this. And you go to here. You get 60K in here. You get 64K in here. So at the end of the day, you see the line 9 is the same. You see it? So now, in this situation, this is the tax. Now, as you can see, the income tax line increased a little bit because half the self-employed tax is not deductible because it was deducted in there. But nevertheless, it was like, do you remember you have like 17K and then 13K, so we're 30 something K in there, right? In tax. Now the tax is changed to this 20K. So now, more likely, so as you can see the legal tax saving through this way to incorporate your business and pay yourself a reasonable amount of compensation, and then also get the K1 income will be not subject to self-employed tax, as well as not subject to title tax. Any question? Any question?
Still, I think need to practice. Still.
Oh, there's always say practice makes perfect. Well, I am training you in less than 1 hour, and this is the schedule C. So obvious, you need to practice. Okay, let me tell you how to do it in a way you know for sure. Number one, you listen to my classes, and you also can go online and the YouTube and watch it. And also, if you want to download the software, you can go to adresoftware.com. There is a free version of tax software. You can actually get it for you to review it. Of course, that free version of tax software, you won't be able to file tax return to the IRS. It's for you to review it, okay, and education. So now, and then you practice this. And after you practice this, you will be able to, let's say, you practice about 3 to 5 times of this one. First, you turn on one computer and watch it, and on another computer to practice this. The second time, you try to not follow, but you still turn it on. If you need it, you go to that places, look at it, but not like step by step follow. And then the third time, you probably like don't even turn it on that and YouTube and try to do it by yourself to see if you get it. If you get it, and you do it one more time, you say, that's easy. I got it. So it's not that difficult. And even though, let's say, a Schedule C, this is a simple Schedule C, obviously. There's some like using home office, and there's some other items. But at the end of the day, and then maybe like some depreciation a little more complicated here and there, but nevertheless, they're all similar. Now, in a normal practice, more likely the number is not like even number like 31K, 3,000 or 2,000, 5,000, 500, 2,400, 12,000. If the client give number like that, more likely they are not doing the right bookkeeping. They're probably doing the estimate to you, which is not supposed to be. The bookkeeping supposed to be done, and it's not the estimate numbers. Okay. So that's why for practice is fine. For the real client, when you see something like that, you should ask to confirm with the client whether or not this is right. Okay. And also in this situation, and in my opinion, the profit margin is so high in here. For 250K, the cost of goods sold only 60 something. And sometimes you have to confirm the client, especially when you see they were beginning inventory 70K and ending like 33K, and the purchase only 20 something K. And sometimes those they make a mistake in here. They will change the whole things. But assuming this all the information is correct, and those are very profitable business. And if because of that, and this client need to pay besides income tax and self-employment tax together. Anyone have questions? Now, there's a second way you can learn it. It's actually you go to our office for some internship so that you can have a hands-on information. You also get somebody to train you. You can do the internship through in office or outside office. Any question for these classes? You guys so good?
Mr. Guan, I have
Yes.
a question.
Yeah, sure.
It's when you do LLC and his taxable income is $82,407, but you said if they do S corporation, they put like a 60,000 for their personal income W-2. Then how much tax they pay total?
So the 60K, now when you're talking about the income tax by itself in here, is the income tax. So 60K in here, you only pay income tax. There's no self-employment tax you need to pay. In the 1040, you remember with all the example we learned up to now, before today, there's no self-employment tax. Today, we pay self-employment tax for this client because they have Schedule C. Now, when they use Schedule C, they will have a self-employment tax. When they use S corporation and pay themselves reasonable amount compensation, the less of the K1, there's no self-employment tax. But what is reasonable amount of compensation depends on the kind of business. And then, for example, for this boss, if the boss would have been hired a manager to run the shop full time instead of the boss going there, and then let's say if normally in their field is 60K, and you pay themselves 60K, it's normally 90K, they need to put them 90K. If on the opposite, reasonably only 50K, they happen to be this business is so profitable, and they just paid us 50K, like that. Okay. Good. Now, I am going to conclude today's training. This is very good. Today's learning Schedule C, self-employment business, and we learning especially the depreciation, how to choose a new. This is going to take some time for you to singing the depreciation. Don't get scared. And this is your very first time to learn it. When you practice makes perfect. Okay, you follow my suggestion, you get it. But this is not the first time we learn about depreciation. Do you remember when we do the rental property, we have depreciation? Now, let me tell you one more thing before you go. Assume they bought a business auto. They bought a car for business, for the house, for the business to use. That's the truck. Okay, the truck over 6,000 pounds. Okay. So now, let's say if this was a very good heavy weight and also very expensive one, let's say 40K, just for example. Now, assuming 80% for the business, the 20% for personal uses. Well, for some time, if the corporation or the business, and then none of them for personal, depends on the situation. Let's say in this situation, 20% for personal use. So what is the situation? Well, this is going to be very interesting. This car, do you know how much you can depreciate it? The 40,000 car. Christina, take a guess. I tell you.
32,000.
Let's see. $10K.
Wow.
Now, I believe we may make a change. Let me see. Let me see if I choose the right things in here. Yeah, it's over 60. Do you see it? We already put in there. Oh, I should have been put in 2021 because we're using the 2021. This, you say 32K? Let's see. Yeah, you're right. You get the full 80% of the 40K, which is 32K, as a depreciation deduction. You see that bumps up in here? Like this. Do you see the tax drop? You see it?
Yeah.
It dropped quite a bit. It was 17K, right? It was 17K in here, right?
Yeah.
No, it's for 13K, but it's quite bad.
So this depreciation, Mr. Guan, this depreciation is with 7 years or 5 years?
In this situation, you take them all. Take them all. Take all. Or 80% is 32. So I put it in 5 years. There's an option to 5 years. Your law allow you for this over 6 pounds. Now, it's very important. What if this car is less than 6 pounds? Now you have to choose under that. The limitation is going to apply. That's why when you see a lot of people go when they buy the heavy one or the business one. You see it? You only get 14K deduction. Because when you're under £6, the 6K, 6,000 pounds, and then the limitation apply. When they're over, there's no limitation. So you have to ask the client to get the closing statement when you put a car, and then from there you get the information. Sometimes you need to go online to search for the car, whether or not there's over 6,000 pounds or not. It's all available. Sometimes on the closing statement, sometimes doesn't. Okay, good. With that, let's conclude today's training. And thank you very much, and have a great evening.
Thank you.
Thank you, Mr. Guan.
Thank you.
Good night.
Bye-bye.
Bye. See you guys tomorrow.
You.
Thank you.
You're welcome.